So hello everyone, welcome to this video. Now we're almost reaching 1,000 subscribers on YouTube, so thank you all for subscribing, those who have subscribed, and for those who haven't, help me just click the subscribe button down below. So today we are going to be looking at how to use what lot size do we use on the trades that we take to get. I'm going to be teaching you guys that how I easily find my lot sizes and what tool I use. Then we're going to begin this video with the review for last week, since I want to put it in one video. The trades we took last week, as you all know, last week I had no loss. It was a very easy week to trade, though I missed some setups in there, but I shared most of the trades to the Telegram channel, and that's the Telegram group. Yeah, and if you have enjoyed the Telegram channel group, you can check for the link in the description. So without wasting too much time, I don't want to keep you guys here for long. Now, this is the 4-hour time frame of GBP/USD. We all see that GBP/USD is in a solid downtrend. It's in a solid downtrend. So this week was just a sell week, as we all know. So what trades did I take in there? So this is the 1-hour time frame. This is the 1-hour time frame, and we can see that the market was just bouncing in there. So we expected it to break above here. We expected it to pull back and continue upside. Reason being, it seems to have broken above this chart pattern, you get, but that has not happened. The market is still throwing higher. So we may look at it bouncing at this level and continuing and starting to reverse back to the upside or going lower. We have to always have a plan A and plan B. So as you can see, the week was just bearish, and there is a repeated pattern it was doing. It kept coming back to retest the levels it was breaking. As you can all see here, broke this area, came back to retest it for the sell, broke this one, came back to retest it for the sell, broke this one, came back to retest it, then broke this one. This one hasn't been retested though we have one that was retested here, but nah, that didn't happen well. The market just went through and reacted around here, and now it's on a downside. So let's go to the 15-minute time frame to determine the clear confluences that I had to take these trades. Now, you all know my strategy is simple, though I add on some other things that the mentorship guys know, but I add on some other confluences in there when I'm trading. That makes my entries perfect, and I take precise trades. I don't delay on the chart. We can also, this is a bigger view. Market came bouncing in there, then dropped, retested it again, dropped. So you can see I took a buy from here to this area. Reason being, we had the third touch of a trend line, right? Another confluences. And the market went, and I took our profit from here. I don't mind this. I always consider the next zone, but I just throw this anywhere. So you can see that the market broke out of this trend line, came back to retest this upper one, then sold rapidly. I entered from here. Take profit was on a psychological level, and boom, it entered the rectangle. Rectangle is a continuation pattern, and we saw this breakout, a retest here. This would have been a sell, but I wouldn't take the sell because I had more confluences here. Now, if you pull up tools like the Traders Dynamic Index, that's the TDI. The TDI is made up of Bollinger Bands. It's made up of the RSI. It's made up of moving averages. We would see that there is a divergence. Let's pull up the TDI to see that. I want to be as precise as possible so that I have enough time to teach you how to allocate lot sizes. I know so many people ask that question. So let's be precise with this trade here to here. Now you can all see that there is a divergence. Here it's going down like this. And guess what? On our TDI, it's pushing to the upside. So that gives you a confirmation that it's buy. Now I shared this trade to the Telegram channel and to the Telegram community, Telegram group, and it hit profits. So here was my target, the psychological level, from this psychological level to the psychological level. So I got 50 pips of this move. So what happens in the morning? I come back and, okay, I saw another divergence here. Okay, I didn't have to close that. But I see another divergence here like this. Let me pick it up. I don't want guys to say he didn't show us. Yeah. And here. I don't know if there's one extended one that causes sell, but we're going to check it out. We're going to see if it's there. So pulling up the TDI, we can see that there is that divergence going downwards and here it's going upward. And we can also see that it's extending if we pull up from here to here and here to here. Yes, it's coming up well. It's coming up well. We can see that we have one here like this to the upside. And guess what? On our TDI, we have it rolling downwards to confirm to us that they sell. Now, you all know I don't use indicators, but at some point you can easily know that there has to be a divergence here. Right, so those are the trades I took today. I mean this week. Now, we also have one here. This one. I took it out of sentiment. Reason being, we have a W pattern and an engulfing. And I also had confluences down here saying that, okay, we're likely to buy from here. So I took the buy. It was a quick scalp. They took a lot of time and I got it from this psychological level. And I sent it out to also the Telegram group. Guys who have not yet joined, check for the link in the description. So what are you looking for next week? I'll share that in another video. Or if I don't make a video for it, I'll just be sharing updates in the Telegram group. So let's look at what brought us here today mainly. I use to determine there's different lot sizes on different account sizes. I use something called the baby pips calculator. It simply helps me break down my account size and help me show me what I'm risking, what I'm losing, and what lot size should I use to take profits. So let's go to this is when you search baby pips calculator, you click in here, and it's going to take you to a site that helps you. Now, this is where all the magic happens. So you see here, this is the most important part right here. I come here and set my account type, if it's in US dollars or Great British pounds or euros. I set my account currency type here. I can put it in anything, but I always use the US dollar. So I come here and put my account size. It can be, let's say, $1,000, right? So what do I do after that? I put the risk. How much? Now, I always tell you guys in your trading plan, you're supposed to know how much you're willing to risk that trading day. And it's not a must to trade every day. You get. So when you've planned to trade that day, what percentage of your account are you willing to risk? So let's try it out. Let's start with 1%. 1%, right? And my stop loss is going to be 20 pips highest. And guess the pair. Favorite pair is GBP USD. And guess what? If I click calculate, it's going to show me that, okay, if your stop loss is hit 20 pips, you're going to lose $10. You're going to lose $10. But this is little money for me. I hate wasting pips, but I'm just showing you guys an example. So $10 is what you're going to risk. But for you to lose the $10, you have to use 0.05 lots. You get. For you to lose $10, you have to use 0.05 lots. And you lose this when it hits your stop loss of 20 pips, meaning if it goes 20 pips into profit, you're going to gain only $10 on a $1,000 account. So what do? Most times I want to just increase here to maybe say this is 2%. Let's calculate it. This is $20. So if I'm in profit of 20 pips, I'll be getting $20. Let's increase the percentage. I'm not saying it should increase, but at times you can be taking in all this. Now this is 30%. You'll be losing $300. Now this is over leveraging. So let's reduce it to 5%. So 5%, every 20 pips, you'll be making $50. Is that within your limit? You get. Now, guys have a different type of tolerance. Some people have a high risk tolerance, some people have a low risk tolerance. So if you're willing to lose $50 per 0.25 entry, you can take the trade. So in order for you to make $50 every 20 pips, right, you're going to have to enter a lot of 0.25. Meaning if it hits stop loss at 20 pips, you're going to lose $50. Now you can play around with this according to the way you think and according to your risk management strategy. In the next video I'm going to show you guys how you can break this down, or how you can use something called a cost averaging system to be able to enter your trades well. Yeah. So let's just make an example. Those who trade funded accounts, let's say the $10,000 account. So $10,000 funded account, you're going to want to risk 0.5% per setup. Now, as you all know, I only trade 2 setups a day. Meaning it depends on the account size, but 2 setups a day. Let's calculate $10,000 account, meaning per setup, per day you're going to risk 1%, right? But this is the first setup, that's why you're risking 0.5%. So let's calculate. Have I calculated? I don't know if I've calculated, just a minute. Let's take it to 1. Okay, yeah, it calculated. So 0.5% of $10,000 per setup, you're going to be either gaining $50 or losing $50. Is this too high for you? Ask yourself that. So on a funded account of $10,000, if you're risking 0.5% per setup, you're going to risk $50. And if it hits stop loss at 20 pips, you're going to lose $50. That's 0.5. Yeah, so you can play around with these lot sizes. You can decide to use 0.10, 0.10 twice, then a 0.05. Those are 3 entries. Yeah, that's how you simply get the lot sizes to use. This is what you want, right? Let's look at small accounts. At $100, $100, you're going to risk higher, of course. So you're going to be in like 10% in order to gain something. So let's calculate. $100 and risking 10%, you're going to be losing $10 if you hit stop loss of 20 pips. So you'd like to reduce this to 0.5. This is not a risk management strategy, guys. I'm just showing how to calculate your lot size. Now, if you're to risk 0.5% of $100, you're going to be losing this at 20 pips, and you'll be gaining only this at 20 pips, which is too low. So take this to 5. Don't waste pips. 5%, meaning every 20 pips, you're going to be either getting $5 or losing $5. You can play around with this percentage the way you want, according to your risk management, your risk tolerance, the rate, your percentage of your risk tolerance. So that's it, guys. For any questions, just drop them to the comment section. I'll answer you, and help me share this video to as many people as possible to help us grow, and it will also help the channel grow. You know, there are many people out there who may have something that you don't have. So thank you guys for watching this video, and see you on the next.